So today we're going to have a little bit of a talk of what's going on in the market, because there's a lot going on. It's been, last week was a busy one. This week as well has been really busy, and we're just going to have a catch up on a few things that are going on and some things that you guys might want to notice. So start off with the market. The market had a weaker day yesterday. The S&P, as you can see here, was down 1%. And that means that this week it is down 2.3%. So a bit of an underperforming week this week. But what has been the key thing this week, and this has been the trend for like the last, I would say, at least 2 months, is that what's been the big causer of the drive of, I mean, if we zoom out a bit here, you'll see in the last 6 months the S&P is down 13%. But in this time period, there's been a lot of small caps, a lot of growth stocks. They've actually been performing okay. You know, a lot of them have been off them lows and been doing quite well. And I've noticed that personally in my account, is that I've seen a lot of small caps, a lot of growth stocks have actually been driving up quite well. And yesterday was another prime example where the stock market was down, and then I looked at my account and my account was, I think, maybe up slightly. And it was just another example of like, all at the moment what we're seeing is the big tech getting, especially from last week, the big tech is just absolutely getting hammered. But when you look at past the big tech, and if you don't look at the indexes, if you actually look at some of the small caps and growth stocks, they're actually performing okay. And the exact same thing happened in earnings last night. Earnings, you had the big tech struggling, and then you had the small caps, a lot of the growth stocks, actually doing quite well. And that's actually quite funny, because when we do move out of the stock market crash, when we do move out of a recession, what are the first stocks that historically tend to be the first movers away from that? What is the first stocks that move away from them lows? It is the small caps. It is the growth stocks. And it's very much like when we enter a stock market crash, when we enter a recession, what are the first stocks that enter the recession? What are the first stocks that crash the most? The small caps, the mid caps. And what happened in February 2021? That was the key month, really, for a lot of those small caps and mid caps to start downtrending. So that's quite interesting to watch at the moment, because that is playing out. And I mean, we'll see what happens. You know, it might not turn out to be that. But at the moment, there's very clearly that going on in the background, and I thought that was important. Now, looking at the big tech, I mean, I was looking at Google the other day. Google had another ugly day, you know, down 4% yesterday, which is just absolutely insane. Look at the 1 month. Google down 17% in 1 month, which is just absolutely crazy. And we're talking now about Google that was, you know, $148, losing 43%. That's unbelievable. Who would have thought Google would lose that much in share price? And, you know, for so long, there's really been a talk that Wall Street will not be happy until we see the big tech get back to the prices it was at, you know, pre-CV situation. You know, Google at $75. Wall Street will not be happy. Wall Street will not go, okay, these stocks are cheap, until we were at $75. Now, for a lot of the growth stocks, for a lot of the, you know, the small market cap stocks, they did that. A lot of them did that quite a few months ago. And that's potentially why they're starting to lift out of this situation a little bit now. Whereas you look at something like Google, Google is still not there. You know, it's $75. It's still got a little bit of its way to go before it gets down there. And then will that be the point where Wall Street are happy to go, okay, you know, we look at that, you know, share prices are going to be back to where they were nearly 3 years ago now. Now we can have the rally. Now we can accept, okay, there's a bit of negativity priced in. We'll see what happens there, but I just thought that was absolutely crazy to see yesterday. And I was looking at Microsoft, and I was thinking, now Microsoft, I mean, Microsoft's just, look at this stock chart through 2017, 2018, 2019, 2020, 2021. And it's just such a steady stock chart. And then even this is taking a massive beating right now. It's nowhere near the likes of Google. It's down 35%. But I was like looking at Microsoft and going, I wonder if we're going to see Microsoft, you know, down at $185. You know, back where it was, you know, pre-CV times. And I got to say, I've been waiting for this one to drop. I didn't think personally for me, I've been a Microsoft shareholder for 5 years now. Maybe even a little bit longer than that. I never thought I'd see Microsoft go that low again. But we could be talking about Microsoft entering pre-CV prices. And I'll tell you something. If Microsoft starts entering pre-CV prices, you know, that $185 range, I will be buying this one, and I've not bought this stock for a very, very long time. So yeah, we're seeing the stocks like that starting to really join in, and obviously because of the negativity on the stocks like Microsoft, like a lot stocks like Google, that's what's really starting to drag down the, like, you know, the S&P 500 right now. But when we look at the small caps, the likes of Mercado Libre, bit of a small cap, mid cap growth stock. I mean, these guys, they're up 4% after reporting earnings. It's a stock that I've been trying to build a position in the last kind of 3 months. Same again, they came out with another smash. EPS was a good beat. Revenue was just a slight miss by 10 million, but when you're doing 2.6 billion, you're okay with that. And then they also came in with quite good news going into the fourth quarter, going, yeah, everything looks pretty good really. And that helped the stock to do absolutely amazing. Now, with it only being up 4% and having amazing earnings, this was the ideal situation I wanted. I wanted Mercado Libre to come out with amazing earnings and then the stock to kind of be like, eh. And that's what's happening. I mean, it's up, but not as much as what it should be. So when it's something like a 4%, if we have a negative day in the market, that 4% could easily get given back. And then I'm talking about Mercado Libre putting in amazing earnings and it's still, $870, which is what I really asked for a few days ago. So that's looking good there. Callaway Golf, 3.2 billion market cap company. Same again, these guys came out with earnings. The stock is up 3.27%. And same again, earnings fantastic. EPS was a beat, revenue was a beat. They guided for the full year 2023 already and expects net revenues to grow approximately 10% year over year, which is what I've got forecasting. And once again, solid numbers from them, and that's a small market cap company. And then we had a company like Block, who then came out and reported numbers. Pre-market up 14%. And this stock has just been absolutely killed. But once again, we have the shares performing really good. And when you look at the earnings report, it was absolutely solid. The Bitcoin revenue, the tough comps on Bitcoin has started to go out the way now. We're starting to return to decent amounts of growth. EPS was a really good beat as well. And when you look at the subscription service part of the revenue, which is a really key driver for this, once again, up 71% year over year. And that's the part with the really good gross margins. So yeah, breaking the trend once again. And then when we go look at the big tech, what did the big tech do last night? Well, probably the star name that was reporting last night was PayPal. A big company, 88 billion market cap. They come and report earnings. What happens to PayPal? Well, at one point, this stock was down, 12% off their earnings report. I mean, it's recovered a bit of it now. It's only down 6%. But initially, the stock dropped, 12%, and it went down to the $67 range. And once again, we look at PayPal, and their earnings were okay. The EPS was a beat, the revenue was a beat. I think people were a little bit spooked about potentially the guidance they gave. The guidance was revenue of 27.5 billion compared to the outlook of 27.8 billion. So there was a little bit of a downgrade there. It wasn't a massive change in the guidance. And if you look at the EPS was actually hiked up from what they were expecting as well. So that was moving in the positive range. So it wasn't like a terrible guidance. Sure, it wasn't amazing, but it wasn't terrible. And the quarter was, above expectations. So you look at PayPal and their earnings were pretty good, really. And then you look at the PayPal stock and you got absolutely killed. And this is what's happening. Big tech, the holdings in the Nasdaq, the holdings in the S&P 500, they're just really starting to get hit massively at the moment. And when you look at the other stocks, the small caps, the growth stocks, they're all bringing out good earnings and they're all doing really well, which is just really interesting to notice. Now, obviously, you guys, by the time you watch this video, you probably have the DraftKings earnings out. I'll see what's going on there. I expect more than likely a negative market reaction, just because it is normally a negative reaction to DraftKings. But I'll study the earnings. If there's demand there and if there's quite a lot of good information there, I'll probably do a separate video on that on potentially Saturday. But yeah, so just so you guys know about that. And one last point that I want to kind of show you guys today. So today, the 4th of November, we get the unemployment number. So this is probably going to be really key for the market as well. You probably see some sort of reaction when this comes out. You'll see here that the unemployment rate previously was 3.5. And the consensus this time is for it to be 3.6. Now this is going to be key because this is really important to assess how the economy is going. And also it's key for the Fed, because what we're expecting at the moment, we're expecting a slowdown in the economy. And with a slowdown in the economy, you will see obviously unemployment rate starting to creep up. Now at the moment, that hasn't been happening. This is what we've been saying. The economy is actually holding up quite okay at the moment, and when you look at the fears that are out there, is not translating into this. Now when the employment starts increasing, that's when it gets worrying around a recession. And this is big for the Fed, because the Fed want to see, they want to see the employment rate creep up slightly, but they don't want it to get, terrible. They don't mind it going from, 3%, maybe 4%, but they don't want to see it start creeping into the 6, 7, 8%. That's when they're like, okay, the employment's creeping up, the economy's getting worse. That's where we start slowing down the interest rates. But if anything, if this kind of stays, if it comes in at 3.5%, if it starts creeping in 3.4%, the Fed are going to be staring at this and going, oh, look, the economy's still really strong. People still have jobs. We can afford to still keep putting those interest rates up. So this is a bit of a funny situation that will happen today, because if it comes in lower, people are going to be looking at that going, oh, the economy's still really strong. Obviously, then the Fed are going to go, look, everything's okay. We can still afford to increase interest rates. Then if the number comes in at, 3.6, 3.7, 3.8, there's going to be the point of view of like, oh, the Fed might slow interest rates down because, the unemployment's starting to creep up now. But then you might also have the other factor of, oh, people are going to be looking at this going, oh, the economy's getting, weak now. The recession's starting to hit, people are losing jobs, time to panic. So this is actually a bit of a lose-lose situation today, whatever number comes out. I think the best thing is that we just I think if it comes at what the consensus is, which is 3.6, I think that will probably be the ideal situation where you're like, okay, the economy is still strong. However, it's not job employment isn't getting better, and that might work against the Fed a little bit. So this is really tricky numbers that are coming out today, and potentially that could move the market a little bit when that does come out. Anyway, yeah, a lot of stuff that are going on there that I want to show you guys with the big caps, small caps, mid caps, growth stocks, unemployment numbers here, and hope you enjoyed this little quick video talking about that. Anyway, guys, if you could smash the like button if you're new around here, subscribe, and I'll catch you in a bit.